Hi everyone, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Well, we're back again on another Monday, and we have a little bit to talk about today. So remember about 2-3 weeks ago, we talked to you about the new FHFA 0.5% fee that was getting added to every single loan, and I was like, hey, this is probably gonna get overturned. Don't stop your refinance now. Keep moving forward in case this thing gets eliminated. Well, as you probably saw from our Facebook feed, it was delayed. So it wasn't completely overturned, but what was supposed to start September 1 has now been delayed to December 1 of 2020. Now that buys you a couple more months to do your refinance before the new FHFA fee takes place on your loan. And as we discussed, there will be a couple of ways that is collected. Number one, it could be added into the closing costs of your loan amount. It could be added into the rate and tucked into a higher rate so that a higher rate would compensate for the amount that the lender is going to have to pay the Fannie or Freddie, the FHFA fee. Or it's going to be by the result of an increased loan amount. So basically, your closing costs increasing your loan by that amount to kind of absorb it. Now, they think that that's a reasonable solution. Any of those are a reasonable solution to you, the homeowner. But you know, I'm still going to hold my breath a little bit that there's a chance this gets completely overturned, because essentially all they're doing is taking money the long way around when eventually it's coming from the Fed. The Fed is injecting money into the mortgage-backed security market. Mortgage-backed security market is lending it into the lending industry, and people are refinancing. So it's just a long way around to get the money that they need for the rainy day. And I think that it's quite possible they could still end up getting it in a completely different fashion. But what this means to you right now is if you are still in your refinance, you need to hustle that thing on down the line as fast as you can. And also please know that behind the scenes, the loan officers, processors, underwriters, appraisers, funders, everyone is working as best they can and at maximum capacity. You know, bear in mind, the mortgage industry as a whole is trying to do $3 trillion of demand in a pipeline that normally does $2 trillion a year. So think about that in the context of whatever it is you do. If whatever you did increased by 50% on every single day for the whole rest of the year, you know, it's kind of a tough cookie. So we're doing the best that we can. We hope that you can hang with us too. But that's really the big key thing here, is that this FHFA fee is being pushed off in December. Now, we've got like 9 weeks left in the election. We're looking for a coronavirus cure. The Republicans and Democrats have not yet come to an agreement on the stimulus bill. We have jobs information coming out this week. There's a lot that could move the markets, but there's so much heaviness in each of those things that it's unlikely we're going to see a rocket up in price or a drop down in price just overnight. I think everything's going to kind of hold steady this week while we get some information, get more data, get a sense of where we're going, and then the market will react based on that accumulated information as a whole. So don't expect too much as far as rate volatility this week. Wait till we get new jobs information. Wait till we see if the government can come together and get some sort of stimulus passed. And then, of course, you're gonna have to wait and see how the stock market plays out and whether the Fed continues buying billions of dollars a month of mortgage-backed securities. That will really tell us whether or not rates are going to continue going down, hold steady, or maybe even go up. The Fed's participation directly in the market is what's helping rates stay low right now. So keep an eye on that if you're still on the fence about refinancing. And if you decided that this is the right time to refinance, great choice, because we don't want you looking back in the rearview mirror saying, I wish I coulda, shoulda, woulda, whatever, and missing the boat on low rates. So if you need help with that these days, please go ahead and send us a DM or send us a note, and we'll be sure to reach out to you. Thank you so much for watching Monday. Thanks for watching Monday Mortgage Minute, and we'll see you again next week.